So the residence consideration, if your company is classed as a UK resident for tax purposes, it pays corporation tax on all its profits from the UK and abroad. So this, I think we were speaking just now.
We are getting a lot of inquiries about people opening branches of an existing business here. So the business is running here, whether it's say a property business, and now you have a bit more money to invest in Africa. Can you use the same business to invest in Africa? Now, if you use the same business that is registered here to buy properties in Africa, that will all be considered part of the profits here, and you'll pay profits here. Generally, the advice is to open a different entity there, because then you can separate the tax affairs of the two countries. Yeah.
You still have to declare here, isn't it?
You still have to, if you take personal income. So you see, if you register a company in South Africa, for example, and that company owns properties in South Africa, as long as you're not taking the dividends back into the UK, it remains there. You're not bringing in money to the UK. You don't have to declare it. The issue is when you bring it in.
Is that just for African countries, or because like
the US is different.
In Ireland, we have rental income, but we have to declare on self-assessment.
Personal tax. So this is company tax.
Company tax.
Because company tax, it's a different entity.
This is okay. So company tax. No, just
personal tax, because you're the same person, whether you're in Ireland, South Africa, or here, it will all be declared in your self-assessment.
Yeah. And in any case, your records show that.
Yeah.
Between your salary, between the money from like all your income is recorded in one.
No, we don't even take the money here.
We
don't take it. We don't bring it.
Don't even bring it here.
It's just there.
But they tax it.
Yeah.
Okay. So where do we come in? Like I've said, formation and registration of company with Companies House. So when you register with Companies House, automatically these two entities communicate with each other to say that there is a potential client here for tax.
There's money There's money here.
So once you open a company, HMRC will also know. Because they communicate, because they are interested in tax, they are interested in knowing the companies which have registered.
But there's an option. So what we found is, especially for opening companies to try and get a registration, and therefore you're not trading yet, there's an option when you open the company to say the company is dormant, so that Companies House does not inform HMRC immediately. But if you don't take that option, they get informed automatically. Now you're still in the process of applying a license and offset. As if you see that process takes so long, HMRC is waiting for their taxes, and all along we don't know. So if you're opening a company, especially for the purposes of applying for a registration that could take longer, let us know when you're opening that company so that we can say this is a dormant company. Don't tell HMRC yet, so that it doesn't trigger the other side.
However, they will also then be interested. If you say you are dormant and you are then making money, they will know it, because remember, you have a company account.
And they have access to all company accounts, do they?
The banks, yes, they.
I mean, HMRC.
Not by default.
Not by default.
Oh, okay.
Yes. However, I was saying, they are linked somehow. You have a bank account, which may be for your new company, and that bank account is very active, and yet you are saying the company is dormant.
Let's say it's dormant.
Yes.
Okay.
So those are some of the shortfalls which we tell our clients to say, let's be mindful of A, B, C, D, so that we be proper.